The accounting world is changing and small business owners need to be paying attention. That's what we're talking about in today's episode of the Profit Pillar Show. I'm your host, Parker Stevenson, CEO of the accounting firm of All Finance and author of the book Profit Pillars. Now, normally as a small business owner, you probably don't need to concern yourself with what's going on in the world of accounting, but there has been a lot of big changes going on in the accounting world for the last, really 3 to 5 years that is going to have an impact on you as a business owner and the quality of service you receive from your accounting team, whether it's something that changes with an accounting firm you're already working with, or when you're looking for your next accounting firm and what you should be looking out for. So I wanted to share with you some of the big changes that are happening, what those changes mean for your ability to find great accounting support, because it's never been more important to have a great accounting team, especially in the modern small business world. So that's what we're going to talk about here today. So there's really 5 big sort of stories going on in the world of accounting that I think it's important for y'all to know. And I'm going to go through each one of these stories fairly quickly, give you an idea of what's going on, and then in the later part of the episode, we'll talk about, well, what do these things have to do with me as a business owner? How does it affect my ability to find a great accountant? So the first big story you need to be aware of is that there is an accountant shortage, at least in the US. There's a lot less young people going and getting degrees. For instance, accounting bachelor graduates, as of 2022, they were down 7.8%. Accounting master's graduates down 6.4%. Not huge numbers, but given how many students we're talking about, it's significantly less than what we've seen in years past in the accounting field. The one thing that I think is really interesting is that CPA exam first-time candidates, so the people who are taking the CPA exam for the first time, that's down about 33% as of 2021. So, and these are stats that are being pulled by the AICPA and the CPA Journal. So these are entities that are watching very closely. They have a lot of reason to be paying attention to what's going on in the world of accounting. So there's an accounting shortage. That's the first story. So then the second story is, well, why is there an accounting shortage? And a big part of that is because the accounting business model has been broken for a really long time, and young accountants don't really want to deal with it, or young students don't want to deal with this culture that has kind of been there for a really long time in the field of accounting. Now, the thing that maybe business owners don't understand is that, like, a lot of students that want to go and become accountants, if they're really ambitious, they're going to want to go try to work for one of the big 4 accounting firms. And if they don't get in at the big 4, there's, like the top 100 really big accounting firms where it's going to look good on their resume. They're going to get paid the best, and they're going to get what they hope is really great experience that will serve them for the rest of their careers. But there's a cost to working at these firms. And so there's like the ACCA's Global Talent Trends is they surveyed all of their respondents, and 57 of those respondents said their mental health has suffered because of work pressure. For Big 4 auditors, so they reached out to a pool of auditing accountants working at Big 4 firms. 71% said they feel their mental health has suffered because of work pressure. And the rates for these accounting firms are crazy. So we've been actually hiring been interviewing a lot of accountants over the last couple of years. And if we see an accountant has worked at a Big 4 firm for longer than 2 years, we're like, wow, you kind of stuck around there for a little bit. If they've been there for 3 to 5 years, then that's wild. Because a lot of the times people go work at these big firms and then they want to get out of there as soon as possible because it's so stressful. And a lot of the times it's just really toxic. It's super competitive. You don't feel like you're working on a team. You're not doing work that you feel like really adds value to the client. You're handling very specific tasks as part of a much larger service that's being delivered to the client. So you don't feel like your work is as impactful or matters as much as you want. So it's tough, and you're working ridiculous hours. And while, most firms, their accountants are going to work a lot during the busy season, at a lot of these large firms, the accountants are working 80 to 100 hours all the time. Like, that's just the standard. So there is this issue. And now you're going, well, I don't work with, PricewaterhouseCoopers. Like, I don't work with an accountant at a big firm. But the reason this is important is because a lot of the accountants that run their own smaller firms, they come from these cultures. They come from working from these bigger firms. And so they put these types of cultures into their own firms. And we're going to talk more about why you should care about that in a little bit here. Now, the other thing that has been a huge story, and one that's really impacted us a lot at Evolve Finance, is private equity buying up firms. I'd say over the last 3 years, we get at least one message per month asking if we're interested in selling Evolve Finance. And that wasn't the case for many years. And there's been a lot of, like, in the accounting world, and like, there are coaches for accountants. That's been a big industry that's popped up. There's been a lot of talk about, should I sell to private equity, and what can they do for me? And it's a known thing in the accounting world. Now, the reason private equity originally kind of got into the world of accounting is because they saw that all of these baby boomer CPA firms, these smaller firms, they weren't able to sell their firm to another younger CPA because no one wanted to run the types of firms they were running. So private equity came in, and they started to buy up these mom and pop sort of CPA firms, and then they worked to modernize them, improve the profit margins, and capitalize on modernizing the business. And frankly, I don't see anything wrong with that. But I think now it's just become sort of this like hot topic. Like, private equity is like, ooh, service-based businesses, that's what we want to own. And the reality is that private equity very rarely makes an industry or a business, a specific business niche better. I'm not saying there's not great private equity firms out there that do great work and truly make businesses better in a way that improves the experience for the clients and everybody wins. But in this case, we kind of don't know yet because it's been such a quick burst of purchases. I believe, from my research, there's been like over $6 billion in private equity acquisitions in the accounting world just in the last handful of years. And so this is very much something that's going to change the landscape of accounting and the level of service small business owners are going to get. Now, private equity is playing in with the big boys and going after really large firms, but they're really buying up a lot of small firms as well. And we're going to kind of see how that goes and how that affects small business owners' experiences with these accountants. But there's already been some horror stories, but I'm sure there's also some great stories I just haven't heard yet. But I'm going to share in a little more about what I think you need to be looking out for if private equity has bought up your accountant's firm, or you're thinking about working with a firm that's owned by private equity, if you even know they're owned by private equity. But the other big story here, the fourth big story, is there is an AI arms race going on right now. Now, that is pretty much what's going on in almost every industry, right? But it's hitting harder in like tech because, coders, for instance, are really worried about their futures because AI is getting really good at coding. Or copywriters, for instance, they are struggling right now because a lot of businesses are relying on ChatGPT to help them with copywriting instead of hiring more copywriters. So there's no doubt AI is really having an impact on certain industries. But the accounting world, I think tech is looking at accounting as a massive opportunity to use AI to handle more repetitive tasks. And Lord knows there's a ton of repetitive tasks in the world of accounting, especially when you get into bookkeeping, especially when you get into tax preparation. But as Evolve Finance, we're a fairly modern firm. We're definitely leveraging technology more so than the vast majority of firms. But there are some downsides to this, and we're going to talk more about that, about what that means for you as a small business owner, because AI is not the end all be all. It is going to dramatically reshape how accounting work gets done, but there are definitely firms and tech startups that are getting a little ahead of themselves with AI, and I want to talk more about that here in just a second. But lastly, there's also just this big shift towards advising. I think because a lot of accountants are scared of like, all right, tax prep services and bookkeeping, that's going to get highly commoditized, especially if you don't have a niche and you're not particularly good at it or like doing it, and the only way you compete is based on price. Then a lot of accountants are going, well, then what can I do to make more money? And so all the accounting coaches out there are going, you need to be an advisor. And that can mean a few different things. But usually that means, okay, advisory is like tax advisory, so getting into tax planning, or it means more business advisory services like CFO work. And that's great because a lot of accountants are really smart business people and they sell themselves short and they could be doing more to help their clients, but also not every business needs an advisor and not every person who calls themselves an advisor is necessarily a good one. So we're going to talk about that in just a second. So those are the big 5 stories. There's an accountant shortage. The reason there's an accountant shortage because the accounting world, the culture of accounting is not great for accountants' mental health. Private equity is buying up a lot of firms, and we don't know what that's going to mean in terms of client experience or customer experience in the long run. There's this AI arms race that is already hurting a lot of business owners, whether they realize it or not. And then there's also this big emphasis on advising, which is changing the way accountants are packaging and pricing their offers and selling their offers to their small business clients. So what does this all mean for you as a modern small business owner? Well, I'm going to tell you. So first off, the accounting shortage does mean it's going to be harder to find a good accountant. And a lot of accountants don't even work with small business owners. So there is a shortage there. And I think there's a lot of tech companies and things like that that are going to try to take advantage of that and try to capture as much of the market as they can while there's a shortage. But anyone who's been a small business owner for long enough knows like having a real relationship with my accounting team and feeling like they are a partner in my business is invaluable. It's invaluable. So if your business is really small, then sure, some of the options that you're going to find out there that are going to be really cheap, cool, they're going to be cheap. Probably not going to be a great experience, but if your business is really small, that just might be the options you have and it might be okay. But it is going to be really important that if you have a $500,000 to $10 million a year, modern small business or more, or bigger than that, having a really good accountant is invaluable. It's like having a great doctor or dentist or mechanic that you can trust to do good work and not screw you over. That is only going to get stronger. And it's going to be harder and harder to find those great accountants because a lot of the great accountants out there get too busy and then their service suffers because they don't know how to operate an accounting firm and scale it without the service quality diminishing. So, if you got a great accountant, hold on to them. If you don't, check us out at evolvefinance.com. Now, working with an accountant that's not burned out, like why should you care that accountants are getting burned out? Well, what a lot of business owners don't realize, and I've talked about this in some of my other content, is that their accountant might be filing their tax return at 2 a.m. on a Sunday night because they're trying to get all their tax returns done before all the deadlines, and they're making mistakes. And so if you're working with an accountant that owns their own firm or works in a firm where like overworking accountants is acceptable and allowing them to do subpar work just to hit deadlines, you're not going to have a good time. And the scary part about being a small business owner is your accountant could be screwing up your tax return and you have no idea. They just go, yep, they submit everything. And then you just overpay on taxes for no reason other than your accountant screwed something up, or you're getting a notice from the IRS or the state because your accountant screwed up. Now, I'm not saying these accountants want to screw up. I literally, like I said, have interviewed dozens and dozens of accountants over the last 12 months. I've talked to a lot of accountants that simply just want to do good work, want to be put in a position to succeed and really serve their customers. But if they work at a firm where the systems and the structure aren't in place for them to do high quality work, which typically, again, you're going to have to pay for as well as a client to work with an accountant that actually gives a crap about how good a work they're going to do for you, then again, you could be working with a firm where your accountant is just slammed, overworked, stressed out, and just making mistakes you don't even know about, which is a drag. It stinks that that's even a situation small business owners find themselves in, especially because this is your money. That's why it's so important that you're paying attention to who am I working with and what kind of culture is this accountant working within, and are they given the space to do quality work, or are they just trying to slam through their work and I'm just one of a million different things they need to get done for that day. Now, private equity. Again, I've kind of said this before. We don't know how private equity is going to play out in the accounting world. I do think the accounting world does need to be modernized, and private equity is doing a good job of that, of taking firms that are outdated, antiquated, and modernizing them, because the modernization of accounting firms is truly what's right for business owners for a variety of reasons. But private equity likes to go into businesses, increase prices, cut costs, and that doesn't necessarily mean a better experience for you as the business owner. So that's just something to be aware of. Again, it's hard to know, even if your accounting firm is owned by private equity. It's something that's totally fair to ask. But if you're in the middle of a switch where your accountant is now selling and are moving to private equity, you're probably going to know, and you're probably going to feel it at some point, because again, your prices are probably going to go up and you're going to see the service go down. And the two big things here to look out for is a lot of private equity, they don't really understand what accounting work looks like. So they will move too much of the work to AI to save costs. And AI is just not in a good place to do the bulk of the work. You still need accountants to look over what AI is doing. And again, we utilize AI. We will continue to leverage AI in our firm, but we're also going to double down on the human relationships and the human work that accountants do with our human clients. So a lot of times private equity will overuse tech to serve the clients and save money. And that's usually a disaster and creates a really poor experience for the clients. Or they send a lot of work overseas to overseas accountants that can get really mixed results. There's a lot of challenges having overseas accounting teams doing the bulk of the client work, even if the firm says, hey, we got US-based accountants that are going to be your account manager and who you're going to deal with. But if they're passing on all the detail-oriented work to another team working in a different country, in a different time zone, there's a lot of different ways that can create mistakes and create a poor experience for the client. So those are kind of the two things that I know I would be looking out for if I owned a business and was working with an accounting firm. And these are plays private equity tends to make. Now, there are accounting firms that aren't owned by private equity who are trying to do these things as well. So I think either way, you should be wary if a lot of the work on your file is being sent overseas, or too much of the work is being given to AI systems that, again, just aren't going to know how to do accurate work all the time without another human really in the weeds with the AI to make sure the work's being done properly. Now, any firm that brings me to my next thought here is any firm that's touting AI as a replacement for accounting professionals. That is a massive red flag. If they're like, we're going to do the work and you're going to have live data all the time and you're going to pay a fraction of what it costs to work with other firms and all the and they're really marketing AI as the central value proposition of their firm. That is a massive red flag. Again, there's a lot of great accounting firms that are leveraging AI to make the work easier for their accountant and to make it allow them the tools they need to do more accurate work. That's fine. But we've just seen clients work with some, or at least our clients having worked with some of these AI firms or gone off to those AI firms only to come back and have us clean up all the mistakes. I am telling you, Corey and I are ready to embrace AI. Corey, my business partner at Evolve Finance. but it's not there yet. We are exploring it. And there are ways AI is making it easier to run an accounting firm. But if an accounting firm is telling you AI is doing the bulk of the work, what that means is a lot of inaccurate work, a lot of messy books, a lot of tax returns that aren't done properly. Again, if you have a small business and all you care about is trying to get your taxes or books done at a cheap price, that's fine. Smaller businesses don't have as much to lose, but for larger businesses in that mid to high 6-figure range or into the 7 or 8-figure range, you don't want to mess around with that AI stuff. It's AI. Most of it's going to be AI slop, and they're going to make an absolute mess of your books. Now, lastly, when it comes to the advisory component here, if you want advisory, great. There's more accountants offering advisory than ever before, but a couple things to know. For instance, at Evolve Finance, we don't offer tax advisory services to all of our bookkeeping clients. They have to be making a certain amount of money for the tax advisory service to make sense, because the way you save more money on taxes is by building a more profitable business. The more profit you have, the more a tax advisor or a tax planner can put tax strategies into place in your business and help you save a ton of money on taxes. But there are a lot of tax advisory services who will work with any business that comes their way and put tax strategies into place. And really all it does is make a mess of things, makes things overcomplicated. And you as the business owner just pay a bunch of money for services that isn't actually saving you enough money to justify the cost of the advisory. But the other form of advisory that's really popular with accounting firms right now is the CFO advisory services. And again, for certain business models, if you have a lot of inventory, raw goods, you're manufacturing things, you have investors, and you're trying to keep track of burn rates and things like that, fractional CFOs, hugely valuable. But not every business needs a fractional CFO, because fractional CFO work can be upwards of $2,000 to $5,000 a month or more. We've seen clients pay $10,000 a month for extra CFO services. And that's where I guess we would just disagree at Evolve Finance that every business needs that level of fractional CFO support. And again, because a lot of small businesses just feel insecure about the financial side of their business, they go, well, this is my world of expertise. Maybe I'm missing something, or we're doing something wrong. I better pay all this money to work with a fractional CFO. When a lot of the times it's just your bookkeeper isn't giving you good reporting. Your bookkeeper hasn't explained to you what to look out for on your P&L. Or at Evolve Finance, we give our clients a dashboard that simplifies their numbers and gives them very clear metrics to look out for. If your business model is simple, because even our 7-figure clients at Evolve Finance with 7-figure online businesses, there's more money and more expenses, but the business model is still very straightforward. There's so much that can be done in terms of like internal education in the business and just elevating the financial literacy inside the business a little more, that it can be handled by the team that's working inside the business to do a little planning, do a little forecasting, and understand the financial state of their business so they can make better decisions. That doesn't necessarily mean you need a CFO advisor to help you do that. There's sometimes in between options. And also, just because they say they can do CFO advisory work doesn't mean they're necessarily good at it. Look at their credentials, look at their background. And do they have experience with your business model, with the type of business you run? Do they know the metrics that are appropriate for the type of business that you are running? Because metrics are going to change depending on the industry that you're in. That's what I got for you, though. I know there's a lot going on there, but it's never been more important. Like ultimately, the takeaway here, it's never been more important to find great accounting support. Make sure that accounting support really matches up with the needs of your business, and that you aren't just shopping based on price, because the world of accounting, there's going to be cheaper and cheaper options out there, but cheap accounting work can cause really expensive problems down the road. If you are going to get into the world of business and you want to be an entrepreneur, taxes and accounting, bookkeeping, financial reporting, all that stuff matters more and more as your business grows and grows. And if you cheap out there, you're going to have a real bad time later on. So just given how much more competitive it is to run a small business, especially at the time of this recording and the way the economy is set up right now, a lot of small businesses are struggling. So having an accounting team that you can trust and has your back has never been more important. If you're looking for a great new accounting team or want to make a switch from your accounting team to a great new accounting team, check us out at evolvefinance.com. We are the utmost experts for modern small businesses and online businesses. So go check us out at evolvefinance.com. Otherwise, thank you so much for watching. Thank you for listening, and we'll see you in the next episode.